So now we will talk about another very fun topic that entrepreneurs hate, including myself. Now I love, but at the beginning I really hate it. The financials. Because again, when you have different type of companies, you will have different type of journeys. In my case, I was lucky enough that I started a service company that was scaling, and in my head, always the financials was where they were this way. If I'm not making money, I'm not gonna continue working in this company, even if it's mine. What this means, I was not playing the game of like, when I have users, when I have enough traction, I will have revenue. No, my head was like, if I'm selling a service, I need to make money so I can hire people, I can have a profit. That way, I will be able to bootstrap myself. So remember that I mentioned you that you can build different type of companies. In my case, was like, I want to build something big, but I don't want to depend on outside money, especially for the first company that I built, because I want to bootstrap. I want to be able to control everything. That's good and bad. But financially speaking, that means that the more revenue I make, the more I can grow. That's simple as that. In my head, it's like, I don't need banks, I don't need outside money. As long as I can deliver good services or products, I'll be fine. That's good because you have money in the bank. I was really, let's put it in a way that one of my mentors said, I was stupid. Yes. Why? Because I was not working on the financials that I need. I didn't have the best metrics, KPIs that I need to track, because I said I have money in the bank at the end of the year. It's good. The company is multiplying every year and every year. That's good until you need money. What this means, as long as you can maintain that, you'll be fine in a way, but you don't know exactly if you're losing money. Let's use an example. I was making $1 million at the end of the year in the bank account. That's good, but perhaps I could have 2 or 3. I will never know because I was not following any kind of document of financials. I was tracking who I pay, what the money I was owed, which means account receivables, account payables, but I was not kind of like having a real financial document that I supposed to have, like an income statement, a P&L, or even a balance sheet, as you can imagine. So that was not my priority, and that's wrong. Make it a priority. Why? Because you won't ask for money, and this could be debt, loans, you raise money. Just remember again, depending on how you want to raise money, if you're going to raise money, it's better to ask for money when you have traction on sales. When you want to ask for debt or a loan to a bank, in general, it's better that you ask for that money or at least have access to that money when you don't need it. Because the moment that you start needing money, the banks or the financial entities, they kind of smell it. They will like, you need money, Gav. So it's not going to be the same interest rate. That's one of the things. So now these days, that's what I do. I start asking for lines of credit, credit cards, access to funds when I don't need it, just because the terms will be different because I don't need that money. Of course, once you secure that, it's easy for you to access when you need it for specific occasions. Like I have a big project, a client is late, or I want to do an investment or things like that. That's how you need to think about financials. Because if you don't have that, what will happen is what happened to me. I was doing all good. Remember that I mentioned you that in this example, I had $1 million at the end of the year. Suddenly, I have 2 clients that, again, it's an example. At that moment, they didn't pay because they went bankruptcy and they were not able to pay us. So we lose all that money at the end that I call profit. The company is still running, everything is good, but we didn't have any profit. And for example, if we want to do any kind of investment or growth plan for next year, we have to ask for funds. So when we went to the bank, first thing that they ask you is like, great, show me your financials. And we were like, oh, here's my spreadsheet with money that I have. And they laugh, of course. And that was the biggest lesson for me because I never make this a priority and then I need it. And then of course, remember accounting, I need to sort out my accounting and my accountant because when I asked for information, they didn't have anything ready. It was not accurate. We didn't review that. So we have to fix accounting. After fixing that, we need to work on the financials. So long story short, took us several months, I think like 6 months before we had the company organized in a proper manner. I'm not even talking about the previous years where we kind of like say, you know what, we won't even bother to fix that because it was too much effort. And then we learned that always have your financials in order because that's the best way to make decisions. That's how you realize, hey, my overhead is so high because I'm hiring new people, but the investment is not returning. So should I keep it or not? Or things like that most of you, I hope you understand. If not, we will have another chapter for that. But it's kind of like what it means gross profit, what it means EBITDA, what means those numbers, because all those numbers will make something different for each one of you. There's going to be different meanings for those KPIs. For example, if you're in product, attrition is one thing. If you're in services, attrition is everything. The same with account receivables, ratio, debt, among many other things that we will give on the resources tab as well. But again, as a concept, what I want you to take from this season at least is kind of like have your financials. Whatever you have, it will be good. There are a lot of templates that we will give so you don't make the mistake that I made. Hope it helps.